The month of January 2026, to start the year off, I lost $690.51 trading both automated and manual. I will say the bulk of these losses technically came manual, which will reveal the Webull account in just 1 second. But we finished off with a really stats of that I'm not too, mad about ultimately. The only issue is really kind of like the last day. We kind of got blasted, and I'll talk about that one. But that's just like a possibility. Like you could have a day where, you make 1,500 if all things line up, and then you can have a day where you lose 2,000, which is what happened. But generally speaking, from all the trading strategies that I have been utilizing, whether that's automated, well, not whether, in all of my automated stuff that I am kind of becoming a guinea pig almost in the sense of all that. In doing all that, the strategies generally have a higher win rate and a lower risk reward. So meaning we'll win more than 50%, but when we lose, we could lose a bit larger than our average winner. So this number might be lower. But that's something that I'm willing to do, or I'm willing to take that, just for the stretch. Like it depends. Like you kind of have to find that balance. So when it comes to Webull, let's make sure we're pulled up. Yeah, so I have a small position on AGQ. I pretty much closed that out and I locked in some good gains. But the thing is, with AGQ, that's more of a swing trade, but also like off of silvers, which have been going crazy. I'll talk about some of that trade there. The last month, January, we lost 462. I will say though that we did make actually all of that back in one trade that I locked in February. So that won't count until next month's recap. But just I guess for the sake of this, like this is just going off of this. These are all my manual trades, no automations in here. And if you want to look at cumulative P&L, we made 250 on AGQ. We made break even on TQs, which this one really pissed me off. I'll talk about that. We made that seems low. Why does that seem off? I'm pretty sure we made like $500 on IBIT, unless I had a trade earlier. No, yeah, we did. I don't know what's up with this. I'll pull this one up in a second. We lost $200 on, well, I guess I should go to look at the realized. We lost one. Oh, sorry. This was because this IBIT, this is for January. Sorry. Because I made the money in February. Yeah. So then we lost on Affirm and Roku, small, but Affirm 400. It's kind of a lot, I guess, relative. You think, okay, that's not good, but the sizing of my positions has been going up as time has gone on. As you can see, the account's now at 6,850. So a combination of deposits, which I have been depositing, and well, I guess the most recent trade that I made money on, is really what that comes to. So let's talk about these. They're really, I don't want to waste too much time on this because I do want to talk about the automation. I do want to dive into the data, which I think will be really interesting. But the two biggest, well, I guess we'll talk about IBIT later. That's next month's thing. TQs and AGQ, and then we'll talk about these guys. So let's pull them up. Now, I guess I'll go to QQQ because I played TQs instead of playing Qs. Here's the trade. So what I did was I took this trade. It was actually an inverse of my setup on the 4-hour time frame. I should probably make sure I go log that on TradeZella here because I always tag my trades what they are. If they're a breakout, breakdown, inverse breakout, false breakout. So I was actually watching this and I marked this level off right here on QQQ. And I was like thinking about contemplating a short side trade because I see we were just kind of in this, chop. We're making lower highs. Like we seemingly can't break these levels. So I go, okay, if we can, and we start to make some lower lows, right? Breaking these lows, I'm like, okay, well, my setup, which is a consolidation break, we break that level. I want to look to short. And this is on a Wednesday night. This occurred or pre-market. So I wasn't looking at it at that exact time. The next day though, we open up and whoop, we snap right back. So I go, oh shit. So at the end of that day, essentially, which was on this wick. So at the end of that day is when I get in. And we then kind of push up, chop, a couple of days, price action just kind of taking its time. Really, this isn't a big move. I mean, this percentage-wise is literally going from, it's 3%, which, that's not bad, but that's nothing crazy. That's kind of why I played TQQQ at the time because I was like, yeah, 3% move on Qs. Like, you got to have a lot of money for that to make you money. So I went TQQQ. And what I did was once we got to this day right here, I'm like, well, we're like 90% there. Move my stop loss to break even. And so what ended up happening was move our stop loss to break even. And literally that next day we got stopped out. It nipped us and it hasn't come back. It could work. It could. It totally could. But, that's just what happened there. So that one really was a shame because that one we were up nice. I think I was up $400 on that trade at the time. And then it ends up having to go into the logbook, as a break even when it's like, oh man, that was so close to becoming like a $500 winner, which would have made the month green, if that goes your way. So, and there was that. And there was AGQ, which was a short on silver. This one was kind of, I had taken, my plan was on this is really, I should look at silver's chart to show you the idea. This one sort of out of the system, but not, I wouldn't say it's in a bad way. So here's silver. And obviously, we know everyone's probably seen the charts and knows the deal, right? Let me get rid of this volume. It's just really annoying. So to make it cleaner. So you see the charts and everyone's like, holy shit, this thing has gone crazy. What are we looking at? Like how, when's it going to die? When's it going to end? I remember looking at silver and saying, this thing, I see the potential. Like we break some of these levels right here. Like I like it. I'm pretty sure I traded it at some points in this move. I haven't traded it really since maybe at least $50. I have not touched silver in a while. And it's in that parabolic movement. Doesn't mean that you shouldn't touch it. No, I mean, just for me, it's like I'm looking for a specific setup and I just haven't seen it. So it is what it is. Now, with that being said, if you look back at silver's history, which I think anyone probably could do or logically could do, you go, okay, here's the big move and here's a big move. Okay, this one was back in late 70s, early 80s. And then this one was back in 2011. Okay, so if we were just to kind of generally say these types of moves, like this move from 02 to 11, that's like almost 10 years. Okay, it's like a decade. It went 1,000%. So 1,000% in a decade. I don't know if you want to go back, how far you want to go back here. You could technically go back to 71 to 80. If you do, then you're getting like a big push, consolidation, then a big push. That's 3,000%. That's a lot. I don't know if you want to go back that far, but you could. If you go back to like this consolidation, the move after that consolidation was about 1,000%. So that's where it can kind of get interesting. Or to me, it's like I'm looking at these consolidations, these long drawn out multiple year consolidations, and the move off the back of those consolidations was about 1,000% from low to high. Okay, so then you bring it over to silver and we say, okay, well, what about this one? Where would you put that consolidation? Well, I would probably put it somewhere in here. That's the consolidation to me. I mean, you can maybe make the argument to go back into here, sure. But let's just math it out from both sections. If you went to this consolidation and you were to go to the high, it's 637%. And if you were to go to this consolidation and you were to go to the high, it's 430%. So as crazy as that sounds, I'm actually not that bearish on silver. Am I shorting it actively? No. I think I have 3 shares long of a leverage, which is like small, tiny, just for a bounce back trade. But I was short, which is what I made the money on. And the reason why is because, okay, like when you get these types of moves, are we surprised we had a huge dump? No. Now, does this mean that it's over? No, I don't think so. It could totally go more. And that's where my mind was with that short. So I initiated a short position. I can go back to pulling this exactly up. I initiate a short on AGQ at 342. This is the leverage silver ETF. And what my plan was, okay, we're getting up there. Like you can go RSI, yeah, whatever you want to say, RSI, this, that, bullshit, whatever. I don't look at RSIs. I mean, it's pretty obvious to me it's oversold, it's overbought, but it could go higher. It can. So my plan was to take a stab at silver. And this was after it had made this big move. I believe it was on this day, and we had this huge sell-off, okay? So I took a short somewhere in here, but the plan was on this trade, not my system, my strategy necessarily, but it was looking at the broader picture and saying, okay, we're getting up there. I want to start nibbling in and taking, a share short, and then I will average in. So on AGQ, I was looking for 500 plus to take that next position. And then I was looking for 1,000 actually, or potentially still could be, for that next position or that next addition to my short. So my plan was like super drawn out big. It's not like, a short-term trade, because also the view was I'm looking at these weekly time frames and I'm like, well, you're looking at holding this for obviously you're going to there'll be a week or so where you can catch a big move down, but the plan or the idea is that from peak to trough here, you're talking about 2 years, 2.5 years, and this one was longer. It kind of pulled back and just made lower highs for multiple years. So you could be sitting on this trade for a while, which is fine. I'm not opposed to it. I was willing to do so. But my plan was to just kind of layer into it very, very carefully in case of this continued squeeze. So now that I'm out of the short, it's the same idea. We break a new high, and now I'm getting interested in potentially re-adding into it and then looking at that 500,000 level on AGQ, which is a leveraged silver ETF. On silver itself, I don't know what that would put you at. Let's do the math. So if you go back in time, or I guess if we go back to that consolidation, what's 1,000% from this consolidation? It would, again, that's still up a lot from 01. If you want to call that the root move, or you want to go back to like 2018 and the lows there, or that consolidation zone there around $15. I mean, if you go back to there, 1,000% puts you up around $200 on silver, just under $200. So that's where my head went. My head went to, okay, we're pushing 125. Let's get into this now. And I'm looking for a move. If silver can get up into that $150, $200 ballpark, now I want to be like, not over short, but like getting into the size that I'm comfortable with, like where I want to be on the short. And that was the idea. So now, same thing. If we get back up into the 125 to 150 range, there'll be an entry on a short position. Do we get back into the 150 to 200? There's another one. Do we go over 200? There's another one. And so that's like a triple layer, way to average into it. The problem is you can get squeezed out. So that's why I'm not positioning in big, because you can get squeezed out. So my view is like, well, we're just going to take it little at a time. However, how we actually made money on the trade on silver, if I go down to, I think it was a 15-minute time frame a couple days ago, it was right in here where I guess I'll go to AGQ. So silver starts to kind of pull back. We have some lower highs developing. Okay, we're playing this game. And if I were to go to AGQ, I believe this is on Thursday or Friday of last week. So we had this, this is on Friday. Huge move. So I was watching this right here. Very simple. We have this, you can even go to like a 1 hour or 30-minute time frame. Big move down in the pre-market, bounce back, test it again in pre, bounce back, market's now open. Here we go, we're testing. Now I'll bring the volume back so you can kind of see how the volume plays out. Volume actually increased as this was going on, which is kind of funny how that works. So then I enter on the breakdown here, and I looked for a move down to about 235. That's it, because my stop loss is like 270, 269, somewhere up in that ballpark. And then not only did we get that target pretty fast, like I was expecting this to become like maybe like a hold over the weekend, potentially, depending on how the move was, trade. And we got it, but we went down to a low of 123 or something like that, which is crazy. So yeah, 123s, 124. I mean, dude, it went on an extra $100 beyond of what I was targeting, which is crazy. So you go back to Webull. Not that I don't really look at this stuff too much, like this. I'm in 7 shorts, and then I cover the 7 at 235.98, and it could have gone another 100, which is times 7, $100, $110 per share. Kind of cool, but I mean, you can get like that. I don't really care. Anything that I do day trade wise or shorter term time scale wise, that's more like a inside of a 4-hour time frame, I will go shorter. I will go smaller on the position side. So we only made 256, which is fine, or 255. That's fine. Partially because we had there's minor fees with that on the short side, but it's like $1 or $2. Like, who cares? So that's that. I mean, this is a long video already, but I mean, I want to just put this stuff out there and talk about it because I think it's interesting, and you can see how my brain works, and I can look back on these videos in 5 years, 10 years and be like, oh, dude, remember we were trading fucking AGQ and we had $6,000 in our Webull account? Yeah, it's crazy. Like, I don't know. So then we had all these AI, Affirm, Roku. These were just really the biggest thing that I'll say. AI was the beginning of the month. We went to short, and as you can kind of see, well, actually, this is a new one that I was looking at. I was kind of eyeing it up, and it would have worked. Now look at it. Yeah, that would have worked really, really well. We just didn't get the aggressive moves down that I was looking for. And AI was a pretty solid one where we had broken below this zone, I believe. It was right here. No, you know what it was? It was this. It was this area right in here. So we break this down, and then it kind of snaps it right back. I think I got into this trade literally at the last day of December. Let's pull it up and let's see the Webull logs. We entered on, bought 400, because I guess we shorted in December. Yeah, so I covered the short in January on the 5th, but I got in prior. Why we don't see the records here? Because I entered in December. So, yeah, which is kind of a shame. But yeah, so we kind of just we tried to break, and then we kind of came back, and I got out on this little pop, and that was it. So it eventually went, but needed more room, more, I guess, more leeway on it, which kind of, I guess, is fair. Roku is one that we had looked for a breakout to the upside, got in on this candle right here, tried to go, couldn't go, failed, got stopped out. Is what it is. Nothing you can really do about that. To be honest, it was a good trade because you have this relative high here. If we broke that, I thought we had really good room to the upside. Just didn't go. Sometimes they go, sometimes they don't. And then Affirm. This is one that was kind of annoying too. Yeah, this one kind of pissed me off. Same thing. Breaking up key level. Little consolidation right here. Boom, pop it, get to the upside on high volume, which we had. It kind of went, and then boom, the hammer got dropped. I think they announced something. Trump said something like, dropping rates or dropping interest on credit cards or something stupid. I don't know. Well, not stupid. It was just one of those things. It's like, what are you going to do? And that was this day right here. It was news driven. So it, technically speaking, was looking great. Got even like maybe halfway to our target, maybe more. I think I was targeting up into this volume node, $90 or so, just shy of 90. And then boom, drop the hammer. And that was the end of that. So that was, it just kind of pissed me. It was like, man, like these pissed me off. But the thing is, when you jump back to a bigger picture on SPY, I don't know what the hell that's doing. That's weird. But yeah, overall, here's the problem in the sense of my strategy, right? You got this, and I don't necessarily trade very well, or not me, it's just the strategy doesn't do very well in this. But the thing is, like I've said a million times in the past, the thing is, when you're swing trading, when do you pull back and when do you not? I don't know what the answer is. So to be honest, I just keep doing what I'm going to do. I know that if I'm managing losses when we are in chop, which I don't know when the end of the chop will be, literally, like, how do you know? You can't tell me when that's going to happen. You can say, oh, wait till the Fed speaks, or wait till this guy happens. And then what happens is that occurs, then sometimes it just keeps chopping. So that could happen too. And then you're like, fuck. So rather than trying to guess and tell you when we're going to be out of chop and stuff, yeah, you can look at technicals. I get it. Yeah, I understand. But sometimes you're just, the chop begins right when you enter a trade that looks like we're breaking chop. Like we could be looking like we're breaking out to all-time highs, which we were literally a couple of days ago, and then we kind of fall right back, which is like back in the chop. We could be breaking out to all-time highs here shortly again, and then can fall right back into chop. So that's the thing with the chop. It's like you can't really. You don't know. So in trending environments, we do well, and in chop, we don't. But again, if you manage the chop, you just reap the rewards when the trending environments come back, and then it evens out. And hopefully you end up on the positive side. That's really the hope. And that's been the situation the past like 2-3 years that I've been trading like this. So I enjoy it much more. But hey, if we get a trending environment, which, I mean, you can also make the argument we are trending, and I think we are. It's just the time frame. So if you were to go out to bigger time frames, then yes. The problem that I have is I don't like to go on huge time frames because then you have to suck through earnings, and I'm not holding it through earnings. I'm not going to hold a stock through earnings. So my time frame is like 3 months. You know what I mean? Like I don't want to be in a position more than that because then we're gonna probably have to hold through earnings, which I'm not doing that. So that's generally the deal on the manual side of things. So excited because I'm also adding money to this. I don't know if I'm going to add a lot more right now. We'll see. I said that last time, I feel like, and I added a lot. So I don't know. But the point I guess I'm making, if I go back, yeah, I mean, I added like, we were down around 3K. So this is like, the account's like doubled, almost more than doubled in the past month. Jeez, did I put that much money in there? I guess I did. I don't know. Well, I made some money, I guess, 500 or something more recently. The AGQ and then the IBIT I made money on. So there's that. But the big jumps really were a deposit here, about 1,000, and deposit here about 1,500 maybe. So put 2,500 or so into the account this month or last month. So the good thing with that, though, like I've been saying, is now the size is bigger. and I don't care. I don't have a set dollar risk. I'm kind of going as a percentage of the account. So as the account grows, the risk that I'm willing to take dollar wise is going to grow, but then the reward is also going to grow. So I suspect here, maybe the next couple of months, shortly, we should have a trade that makes over $1,000 on one trade. The next couple of months, not right now, but I suspect that's going to be the case. But the thing I think about that too is like, you can do that and feel comfortable with it when you know you can fund the account further. So I know at any time I could keep funding the account and keep growing it with my own funds if I want to, but that's, everyone has, you go through periods of time where you can't and then you can, and so when you can, it's cool. But when you can't, you just got to make sure you weigh the risks or the downside. So now to the fun stuff, to the automations. So that was just an execution of, I guess today I'll log that one, or not log that one. That was taken care of. So let me go into here. This is now going to show you, let me get rid of my Webull accounts. There's one. There's a combination. There's actually a lot of things going on here. So what I recently decided to do was I'm testing out essentially all of these accounts that I have now that are active, are prop firm accounts. I said I would never go back to these guys, to a prop firm, but we lost $200 last month. The beginning of the month was personal funds, and then at the end of the month, I think from the 20th on, the last like 2 weeks of the month, I changed to prop firms. Some of the accounts are actually like live, not live, but they're all demo accounts, but they are like direct funding accounts. What that means, so what that means is like once I hit the first target, I can withdraw funds immediately instead of having to hit the first target. And then now you are in a new account that can now withdraw if you make more money from there. So that's just a different style. But the reason why I did that is because I have a bunch of trading strategies that I've been kind of dialing up on TradingView. And when I find something that I like, that I want to run, what I do is I add it to one of these prop firm accounts. Now I'm up to, I think, 7 strategies, and maybe one of them I'm going to cut. So it could be 6 or 7, 5, let's say between 5 and 7 strategies. And I've got 5 accounts. And so I have them split across the accounts almost in an even-ish manner. You can't split it perfectly, to where I'm kind of diversifying the risk. They're all doing similar things, but trading different assets. And so some will work, some won't on a given day. And that's kind of what we've been doing. So the point is, now as we go into the reports, we can kind of see like what's working, what's not. This is now the new performance. Make sure we're on January. Yeah. Let me go into the reports section here. Let's go to the overview first. Let's go here first. So on average, on winning trades, we hold for about an hour and 2 that's all trades. Winning trades, hour and 12, losing trades, 50 minutes. These are all day trades. Now we're looking at just the automation strategies. These are all just day trades. Winning days, 12, losing days, 8. Let's see. Max. Do I really care about some of this stuff? Not really. It's not as easy to see. Symbols is where I want to get into the good stuff. So symbols, what are we trading and how are we doing on it? So for the month of January, the main, I guess, make sure we can still see this. Yeah, we can still see this pretty good. Looking at the bottom here, I guess I'm covering the average win and loss, which is not a big deal. 6E, kind of random. That I'm trading that, but I found a strategy that was kind of crushing it. So I'm like, let's run it. Of course, this month it's not crushing it. It's kind of how it goes sometimes. M2K, that's the Russell futures. Just kind of got wiped on that one. Not wiped, but like just had a couple of trades there at the end of the month. Just didn't work. Simple as that. MES did good. MGC did really good. Gold, and then MNQ just about flat. So, okay. So I've done this already, so I'm not going to waste too much of your time. But essentially what I've come to the conclusion is that 6E has not been that good. And the spreads and the issue with fees can eat away. So I have a day trade strategy with that, and it works well for short moves, but based off of fees and fills and stuff, it's not the best. So I'm getting ready to cut that one out And I've actually got a new one on MES, which is the S&P, that I'm thinking about bringing in instead of this 6E. It's a bit of a different approach. It's taking like the first hour and then playing off of the first hour's range on the MES strategy, but we'll see. We'll see. That's something that's still in the process of deciding, because again, yeah, you can have a month worth of data, but you still are, you only have so many trades. Like you don't have like 700 trades, or like not 700, but like you don't have 100 trades. Like you've got 10, 20 trades. It's like, okay, yeah, you can decide off 10, 20 trades, but you can also decide that something is not working when it really is, if you just broaden the picture out to 30, 40, 50, So that's what it gets me a little bit like, so that's that. What I wanted to do deeper was I wanted to go back to my manual stuff and tag them, which I will do that in a bit. But the thing that I wanted to kind of touch on is this MGC strategy. So let me just pull it up really quick. So what I've essentially done is this strategy on MGC is kind of a killer. So what it does is, and here's the back test on TradingView so you can see it here, which is why I think this is sick. What the strategy does is it takes the first hour of the day and it tells you, let me pull up the continuous contract because it throws you off when you're looking at the current one. Watch the report here in the bottom. So 17%. Now this is in prop firm scaling or prop firm's risk parameters, because in a prop firm, I think one of the accounts, you can't lose more than 3% or maybe 6%, something like that, between 3 and 6%. So when you only have 3 or 6% of your account to risk, you have to make sure you're okay with drawdown. So my biggest concern when I'm looking at these strategies is this max drawdown. What is that? And this is being around 1 is good. Because now, obviously, if I have this strategy paired with something else or paired with 2 other ones, and they all happen to lose at the same time, well, we're fucked. Not fucked, but like we could lose the account. We could have a 3% drawdown. So that is a concern. But the consistency of the strategy is just, it's one of the best I've ever seen. I'm not even kidding. So I love this. And so this is why I'm very excited for this one to keep trading, to see how it goes. Now, the cool thing is that when you go out to the entire history, I kind of look at these and you can kind of say, yeah, what you want about these types of situations, because now you're going out so far, the market's obviously changed, but I always like to get a sense of this. And so what I'm looking at is I'm saying essentially, if you were to go back to 2021, I mean, this trading strategy since April of 2021 has been working, but it's been crushing it since the beginning or early 2025. So until that ends, we're going to keep it going. But that's what we always got to be watching and monitoring how they're doing. So we can backtest all you want, but you can also see that, like, well, this is currently working right now. What I have set this to, it wasn't working for many, many years back from 2014, 2019. It was not working at all, So finding a balance of, is it working now? Cool. With, what, like, the potential future of it, right? And so it's like, how do you know? You don't know. You don't know. You really don't. So that's where the whole thing comes into play. That's where trading kind of fascinates me. And the more I think about it, the more I'm like, like if I'm being completely honest with the prop firm stuff, do I think it's a long-term solution? No, I don't think it is. But in a sense of like automation nowadays, which yes, okay, I'm automating strategies, and yes, okay, I can customize settings and make them my own really as much as I want. Could I create my own? And I have created my own code on trading or, chat or Claude and rip it to TradingView and then make my own strategy. I have done that. I've got stuff there that I've tested on other platforms for other stocks and other assets. But my view at the prop firm side of things is, if I pay $1 to $2K to buy these accounts, and I get one payout, that's $3K, well, it paid for itself, Do I expect to just get one? If we have consistency, I think we can do better than that. But that's the idea, which then can funnel into other things. That's really all it is. And I think it's cool. I think the automated side of trading is cool. I've had people asking about it, and they're curious about it. I'm curious about how AI factors into this, because this is like currently not being optimize with AI. Like I'm manually having to go back in and check things. But at some point, you won't have to do that. AI will be playing a pretty big role. So I don't know. It's going to be really interesting. But that was this. The one that was the concerning strategy is 6E. So just check it out really quick. Here's the 6E back test and what I was looking at. So if you were to go to this strategy over the course of the past year, it's done pretty well, but it really did really good from like, you can say April. Let's even go back to March. If you were to go back to March until, I don't know, about October, November, like November. And since then, it's been pretty, see how it has, we have this line right here at 8,000. It hasn't been able to kind of cross that 8,000 threshold. So that's where my mind is like, it's not bad. It's holding up. But we are kind of in a holding pattern. So I'm giving it the benefit of the doubt to let it play out. Luckily, it's not killing me. But I don't want to see this thing, because I might have to adjust the settings, or I might have to just toss it if I find something better. So now where my mind goes and what I'm going to do, it's 4:45 on a Monday. My plan is tonight, I've got a couple of little minor things to do for work, but my plan is what I do is I'm going to reassess the strategies. Every couple of weeks I will do so to just reassess how the backtest looks. And then I go to TradeZella and I say, okay, how is it trading? Is it trading? Is it the same? Because there's slippage, there's fees. How much am I keeping? Are we close? If we're close, I'm good. I'm happy. If we're not close, let's see what the problem is. If there's an issue, fees, slippage, whatever, okay. We assess that, understand, okay, great. But then what I want to do is I want to compare these graphs and these charts to see performance and see if I can find correlating times where, for example, 6E, this strategy is really, really hurting. It's not doing well. Let's say this September period right here or this November period. When it's not, and do I match that up with the exact same time period for a different strategy? If I can, and then do I match the good periods up? If they are highly correlated, I'm not going to pair those together on the same trading account. I'm going to separate them into two different accounts. This way we're diversifying and spreading our risk just a little bit. It's the idea. So that's what I'm going to do tonight. Figure that out and then assess if we have to adjust things and so on. So yeah, I mean, it's cool. It's coming along, man. I mean, it's whether this stuff kind of pans out or not, what I really want is, and I'm working on it, is the explosion of, not explosion, but the expansion into swing trading strategy. So I've written some of my own. I've even adopted others. And the company that I'm working for, Alpha Insider, as an example, does that. And so they track all these strategies, and most of them are swings. And so what I want to do now is, I think the next layer, day trading is cool, but I do think that you're playing kind of, if you're manually doing it, the subjective and the discretionary side is your edge, in my opinion. If you're going robotic and you're going automated, I think you can definitely have edges, but you again also have to know when it's time to adjust settings and change the settings and do things. And maybe that's where AI comes in. But then if everyone's doing that with AI, how does that work? How does it balance out? I don't know if it even makes sense. Where I think it gets more interesting is the swing side. And that's where where I'm going to be funneling money. So my idea is, if this is cool, this is working, great. If it makes money, we're going to take that and then we're going to funnel it into the swing trade side of things, the automation on the swing trade side, the automation of long-term investments. Because what I also want to do at some point, and I want to write something of this nature, or it's easy enough to manually do it, but having an automated side of this would be really cool, is I want to really just dive into SPY, QQQ, DIA, IWM, the main ETFs, the 4 ETFs. The S&P, the NASDAQ, the Russell, and the Dow. And then I want to each week or each month or every quarter or I don't know what the exact best time frame is I want to sell covered calls on them at a specified amount out the money on a specified day. So for example, I need to come up with the exact specifics, but write some sort of code that says, okay, when we have a plus 2% day or a plus 1% day on this ETF, we sell a covered call for next month expiring, whatever the monthly expiration is or whatever. And what that does is it gives us cash flow. So now if we can automate this or create this, what we end up doing is we're riding the overall markets, okay? And then we're adding that extra like dividend almost by getting the cash flow. So if I can automate that or not even automate, it doesn't have to be automated, but if I can automate things of that nature that are like not, trying to make 7,000% on your account, not trying to double your account. No, what we're trying to do is just capitalize a little bit more than the average. So ride the S&P, capitalize a bit more than the average. Also, take advantage of, with maybe using margin, take advantage of downside days, take advantage of things like that. So putting probabilities and history on our side to say, okay, when the S&P does this, when it's down X number of days in a row, or when it's down this much off the highs, we do this because historically speaking, we tend to see this. And so doing all of that, but being able to write that and have it automated for me and have it diversified across S&P, NASDAQ, Dow, multiple stocks potentially as well. Now, and we're putting, a little bit here, a little bit here. We're not putting all of our eggs in one basket. Now what we are doing is we're creating this diversified portfolio almost of automations that have the potential to beat the S&P by a touch. And now we are allowing ourselves to cash flow and diversify our income and our investments. That's where my brain goes. So I know this is a super long ass video, 36 minutes in, but that's where my, as we get deeper into this stuff, the automations and everything, interest me. Do I still think I'm going to manually trade? Absolutely. I mean, hey, dude, if we can get this account, because now we're using, whenever I take a trade, usually I'll use some margin depending upon the size. But now, I mean, you're talking about trades that are over 10K size. So now if we're looking for a 10% move, well, that's over $1,000, right? So now, the trades can get bigger and bigger and bigger here. And just like anything else, we can eventually take funds from here as it gets larger and larger, take funds from here, put it into automations, diversify. Again, I'm not saying like this, my whole view of all these things is not you should trade. No. It's diversifying your income. So you're essentially like able to actively make money here, but this is from an active perspective, this is pretty chill because it's swing trades. The day trades is active, but I'm not trading. It's automated. So it's automating that side. If it works, awesome. We have an extra arm, extra leg of income. You have your own job, whatever you're making money from. And then you have investments. So you're just kind of stacking all these things and diversifying it. And, at points, some will do really, really well and some won't. And so you kind of even that out, but you're not going all into one basket. And as anything that I've learned over the past, 6 or 7 years of being deeper into this stuff is things change, markets change, and when things that you are doing are not working, it fucking sucks. So if you can cover multiple angles, you don't have to fucking feel like you're sucking ass. Like you don't have to feel like you're getting crushed because now my swing trade strategy sucks and that's all I have. Well, no. Now you have these other legs, these other angles, these other fingers, the arms in your trading, in your investing that you can utilize, just like anything else, just like income. Oh, I take a part-time, I do part-time this or part-time that, or I take on contract work, or I'm a personal trainer on the side. Like that's how my brain views. This is so fucking long. I'm so sorry if you're still watching this video, but that said, thanks so much. I will leave a link to I got links to Webull. I got links to TradeZella. I don't think I have a link to Alpha Insider. I probably should have one. But if you go to their social media, like that's me. Like I'm running their social media. So, and I'm starting to use the stuff. It's pretty sick. All this stuff is automated, or you can automate. You can copy the strategies, but they're automated. These are regular people on TradingView, and essentially everything is logged. So it's all third-party tracked, and you can automate it, or you can copy trade that person like manually. And yeah, I want to use some of these. I also want to bring in more stuff of my own that I've created and really kind of grow that. So thanks so much, guys. Last, I guess I'll leave a link to TradeZella below where I track it all. Because if you track it all, you become the manager. Like I'm sitting back and I can say, big picture, bird's eye view. Yeah, this is not working. Get it out. This is working. Great. Keep it. This is working. Great. This is not. Get it out. And that's all you're doing, as a managerial role. I am going to stop. Peace.